Hey everybody, I hope you all are doing good. In this video, I wanted to give you guys a objective and an unbiased comparison between active day trading versus active investing versus long-term investing. And in this video, I wanted to focus on what's the real cost if you're trying to pursue any of these pursuits for yourself in the markets, any of these routes that appeal to you in the markets. What's the real cost like in terms of your time, effort, stress levels, emotional ups and downs? What's the real cost look like? And once you actually make it to the other side, what does the promised land really look like? And I find that humans, we don't really have a problem paying the price until the promised land is good enough. So we're going to talk about what's the price and what's the promise look like, and then you can decide if the promise is worth the price, or maybe one venture is, or one pursuit is better than the other given the promise and the price. Right, so you guys can decide after that. So this video is going to be all about that. And by the way, if you're new to this channel, well, first of all, welcome. My name is Shaun. I'm an active US equities trader and investor, and on this channel we talk all about trading and investing. So if you're interested, consider subscribing. And without further ado, let's get started. Let's actually get started with active day trading and just keep broadening or keep increasing our time horizon that way, right? So starting off with day trading, right? When it comes to day trading, the cost is going to be certainly the highest, right? And the reward is going to be certainly the highest. And if you don't know what day trading or day trader actually does like in the market, basically they're trying to find stocks, and stocks that are making bigger moves on an intraday basis, and they're trying to capture that intraday volatility and basically just profit based off of that difference. If the stock is at 10, doesn't matter in the future. If the stock goes to 100, that's fine. But today, if the stock is only going from 10 to 13, they just want to capture that $3 move, take a very highly leveraged position, and capture that $3 volatility for today. So that's essentially what a day trader is doing. Now, in terms of time commitment, as you can possibly understand, is the time commitment is just the highest. And what that really looks like in terms of learning, and especially your initial periods when you're just going through that learning curve, you're looking at 6 to 10 hours of really just learning and screen time, trying to balance the course material, or a mentor is giving you some sort of instructions on what to do, what to focus on, and just learning the market terminologies, learning how to find good stocks and market patterns. And I think learning is actually probably the easiest thing when it comes to talking about either of these three, right? Just gathering information is probably the easiest, but turning that knowledge into real tangible profits, that's what's difficult. And if you want to generate tangible profits through day trading, this is the kind of commitment you're looking at: 6 to 10 hours pretty much every single day, particularly in your early years as a day trader. And you're looking at this learning curve to last for 2 to 4 years typically, till you become completely self-reliant in the markets, and somebody's able to just generate consistent profits in the market. Now, when it comes to actually mastering day trading and really generating some real, tangible, sustainable, reliable profits for yourself as a day trader, I think that depending on how seriously you're taking your learning, and if you have a mentor who's really personally just giving their time and really guiding you, then you can actually cut down that 2 years time to even months if you giving your time, energy, and effort, and really just taking your day trading learning a lot more seriously. That can happen. But what I find that when it comes to day trading, just really mastering and getting to the other side really requires you to have this quality that I'm about to say next. And achieving this quality is possibly the hardest in comparison to being more disciplined, being more patient, being more quick, and all sorts of stuff. But I think this is, and this quality is detachment. Really not being able to, or not really getting influenced by a P&L so much. that you end up making a lot of mistakes, right? So this is probably the hardest quality to or hardest skill to develop and really just master. And I think it's not something that you can anytime master or master anytime soon. It's always going to be somewhere there. You just have to sort of be in your risk parameters to not really make a lot of mistakes with your day trading. But mistakes really brings me to the next point, which is, as a day trader, you're not getting paid to find the best stock. You're basically just getting paid in for recognizing the patterns really quick and making quick decisions and then executing on those decisions really well. So that's what you're actually getting paid as a day trader for. And because things are really moving quickly and so fast, and you have to be just that much more good in analyzing the situation, taking a decision and executing on that decision, and making sure that decision is not going to cost you a lot in terms of taking really high risk. And also when there is a really good situation, you have to just maximize that risk as well. So because things are moving so quickly, and we humans have to, or any day trader has to take that quick decision and execute on that decision, the smaller the time frame, the chances of mistakes also increases, right? Just because things are just moving faster. And that's the reason most day traders take so long to get to the profitability land, or consistent profitability rather. Now, whether you're looking to learn how to day trade or you're actively day trading in the markets, it's pretty much a full-time venture, because 6 to 10 hours, and I'm talking about normal people. I'm not talking about, some people really have an advantage where they're able to work remotely a lot more, or maybe the time zone is just in congruence with the US markets, so on and so forth. So I'm not really talking about that. I'm really talking about the average person who has a typical 9 to 5 job, or maybe has a business that they have to give that 9 to 5, sort of 9 to 8, and that time, and they're just not able to be in front of the screen actively, at least. So, regardless of you just going through your learning curve, or you actually made it on the other side, even if you're just trading with a small account, really doesn't matter. You have to give that 6 to 10 hours, time in front of the screens, in front of the markets. And this is the reason a lot of people also struggle. Particularly, I also struggled with this a lot. In fact, always wanted to become a day trader for the longest time. The moment I saw the markets and charts, I was instantly hooked. And but long story short, I think when I wanted to just try to give more time to my day trading, I always was in a position where I don't have enough time. And when I didn't have enough time, or sorry, when I did have more time, I wasn't in a position to financially support myself and allocate some of those capital to the market. So what I ended up doing is I would work for 1.5 year, save some money, really live frugally, and just put some money to the markets and allow myself to live off of savings for a bit, give myself 6 8 months. And basically this went on for 4 or 5 times, and I think it was the last time that things just clicked for me, and I had another year's worth of saving, year plus, if I was a little bit more tight with my budget. But that is what I was looking at. I had to just let go of any other things that I was doing. I had to let go of my job or my freelancing career at that time. I really had to, if I wanted to become good at day trading, I really had to give it full time, right? Go all in. And so you really have to give yourself that time. And with that time, we don't live in a world where things are free. Rent is not going to stop. Bills are not going to stop. So you really have to figure out the finances side of things, if you have to pursue, and you have to give yourself that kind of time as well in the markets. And another thing about day trading is PDT rule, right? So PDT rule really has this, that if an investor has less than $25,000 into their account, they're not able to actively day trade. They're just allowed to have 3 active trades a week. So what that means is, you take one stock, or you enter into one position, that is one trade. If you exit that same stock, and that is second trade. So basically you only have 3 of those per week. Now that is really not a big challenge in this day today, basically, because you can easily open an offshore account and get started with your active day trading, and they don't really have PDT rules. PDT rules only apply to US brokers. Now, different countries might be different. Some countries really don't have an offshore broker giving them the service, so those things are very different. But for the vast majority of people, pattern day trading rule is not really something of much of a concern, at least these days, if you just want to dive into the stock market and get started. And I would even recommend everybody, even if they become really good at day trading, but if they don't really have that proven track record just yet, it's best to just start off with a really small broker and just play around with that money. And if you can grow that small money consistently trade and profitably trade, that's the time to actually allocate some real capital. And bringing to and going to the next point, if you are actually trying to use day trade as a profession and do this for a living, you're looking at 50 to 100K, in your account as capital, if you really want to be able to trade, make money, and also be able to support yourself from that money. So that's the financial side of things with active day trading. Next ones are some of the heavy points. Should really be the points that you should really take it seriously and really decide at this time that if you really want to pursue day trading or not. And these are your emotional cost. I mean, day trading is really taxing. The P&L ups and downs, the stress that comes with it, it's really, really high. And the emotional burnout a lot of traders face is absolutely real. And especially if you have a losing streak, right? So if you have a losing streak, you're going to go through those periods where you lose confidence in your own self. You're going to feel the lack of self-worth. You're going to feel that, I'm not good enough, or I just don't have what it takes anymore. So things like that. I mean, these things are going to come into your mind, and it's going to really play with your mind, basically. So you have to be very mentally resilient, and you have to develop that resilience and develop the confidence that it's only a period of drawdown, and my strategy is good enough and profitable enough, and it's only a matter of time where my strategy starts to pick up again and generate me some good returns after that. So you really have to be mentally that strong and that much more confident in your own strategy as well. But on a practical note, if you're as an active day trader who's doing this for a living, if you're going through a period of drawdown and you haven't made enough profits, or your account has been in the red for 1 month or 2 months, these things do happen. You have to have those additional funds set aside for days like these or months like these. So, more funds required for day trading. So that is what it is. But when it comes to the promised land, I mean, you're looking at when you become or make it as a day trader, you're really looking at becoming a cash generating machine, right? Cash machine. I'm not gonna write the whole thing, but yeah, that's what essentially it's going to look like. 7 days out of the 10, if you're doing it right, 7 days out of 10, you're going to be profitable. 3 days out of 10, you're going to be losing some money, but that's okay, because overall you're going to be profitable, and basically you're going to end up becoming a cash generating machine. It's an incredible feeling to be self-reliant and go to the market and extract money and really be able to support yourself that way. Another side note I wanted to mention with any of these three, with active day trading or active investing or with long-term investing, you're never going to get a sense of you're generating value to the marketplace. You're never going to feel that you're generating any value, because it's a very self-focused profession. All three of these, it's only just me, and my performance, and my performance is really that rewarding, but you're not really generating any value for anybody or, for the marketplace. So that's one thing I just, sort of digressed and just threw it out there. But uh, as a day trader, you're really looking at becoming a cash machine. And some of the stats: a successful 5% of active day traders tend to make six figures or multi six figures. And only the true 1% elite are the traders that are making seven figures or, multiple seven figures a year. So those are the odds. Only 1% of so many different traders take it seriously enough, after putting so much work, are able to reach those elite 1% levels. So those are the odds in your or against your favor. So you decide at this point, after all of these costs, is the promise worth it, right? And this is what the promise really looks like. And another quick tip that I wanted to give on the topic of day trading before we move on to active investing is a quick tip that you can implement if somebody's really just passionate about active day trading, and no matter what happens they just have to be a trader and they just want to become a day trader, and that's what the goals are. Completely understand it. I was once in that position myself. uh, so now it's just become a job, but at some point I was just that guy who wasn't profitable. And after on my fourth or fifth attempt, when things really started picking up, the tip that I have for you is, if you really, really want to supercharge your learning curve and want to get to the other side much more faster, the only way that I personally found for myself, in fact, a lot of traders actually do this, and I'm sure you already know about journaling, reviewing your trades, and all that is great. But just record your own screens and rewatch them, right? Record your own performance and rewatch your own performance. Just observe it. And I think that's the fastest way you're going to get better. But the only problem is, and again, coming back to the 1% true elite or 5% successful trader guys, uh, I know based on the stats, most people are just not gonna put in that kind of hour. And you're looking at doing those screen recording and watching your screen recording, watching your performance, analyzing performance, trying to improve one thing at a time of your performance for multiple years. And less than 1% of people are actually gonna take that kind of effort and do it consistently in order to see those meaningful gains in their own performance and in their own trading, right? So that was just a quick tip I thought I should share, because that personally was a very big game changer for my trading as well. So moving on to active investing, right? So active investing, it's actually So active investing, I think this is more suitable for most people, right? I think very few people today, they are like extremely passionate about the stock market. They see the money and they love the money, but they're not really, really passionate, and they're not really going to be putting in the work, realistically speaking. And even if somebody wants to put in that work, they usually have other commitments, such as family, and such as their job, such as their business. And trying to become a day trader really means that you have to give up a lot of those things and commit most of your time, effort, energy, and towards your day trading. So when it comes to active investing, you're basically looking at 1 to 2 hours per day in terms of your time commitment. And that's time commitment is going to be about researching the stock, finding the right stocks, and maybe keeping an eye on what's really happening with your portfolio. And in terms of executions, these days, most platforms, they do have mostly automated stuff. So basically, you can actually automate most of your trading, basically, when it comes to just placing orders, certain orders, placing limit orders, putting a stop loss order, putting a take profit order. One cancels the other, things like that. So when it comes to order, placement in the markets or executions in the markets, you can really automate quite a lot of those things, and you have that luxury with most of the platforms just being that good enough. And in terms of screen time, you're not really looking at a lot of screen time. Sure, there is a learning curve, and you still have to pursue some, education material, books, courses, or just a lot of free YouTube content as well, depending on who you are and how much time do you have. Which route do you want to go? If you want to not spend any money, and that's great, free content is everything there, and you can pretty much learn a lot of stuff, and most of the stuff with free content. Only thing is, it tends to be a little bit more scattered, and there are a lot of paid courses which are going to take you to the other side in a much more straight line fashion. So depending on who it is, but gathering knowledge and understanding is just a lot more easier, and you don't really have to have that many reps or repetitions or practice to be that perfect executioner like a day trader would. And the screen times tends to be a lot less. And when it comes to your time commitment, this is what you're looking at, 1 to 2 hours per day in your research. And if you don't even have that kind of time, then it's fine. If you're somebody who's really interested in taking your investing game to the next level, feel free to check it out. There's a link in the description below where you can learn how to actively day trade, where you can go from an absolute beginner to, profitable active trader or active investor, depending on what you want to do. And we also have active research for you. So basically, you don't even have to have this 1 to 2 hours, allocate your 1 to 2 hours a day. You just need to learn what to do when you see the right stuff, and we give you all the right stuff. And on top of that, you also get my expertise and my ability to pattern recognize and recognize the good setups. So basically, you have everything at your disposal, and all you have to do is executions. And even those executions can really be automated. So basically, looking at growing your portfolio in 5 minutes a day. But that's if you feel free to reach out if that's you. Yeah, more than happy to help. But getting back into this video, with active investing, when you're doing this, things are also not moving super quick at lightning speed like a day trader would. So, managing your emotions is also a lot more easier, because let's say the biggest struggles when it comes to day trading happens is when your P&L is just so big, and you see so many so high profits in your floating P&L, and that's where people just get shaken out, and then they're compelled to take profits a lot more sooner. And that's what the biggest cause is for a lot of people to start taking profits early and get shaken out. But when it comes to active investing, things are moving a lot more slower in comparison, because you're trying to capture that 3 4 week move at the minimum. And even if you see a really big floating P&L, you can always take a step back, take a breath of fresh air, go outside, baby, and just really think about it. And you have that luxury of really being able to slow things down and think about it and take a much more wiser decision. And also, because things are not moving so quickly, you're not always in a rush, and you're not trying to capture every single cent of the market. You could be late in the market by 0.5% to 1%. If you miss that kind of move, that's still fine. You can still enter a little bit late, exit a little bit late. You're not going to be giving up too much. Now, in comparison to day trading, active investing is also a lot more scalable. It's next to day trading is really, really not that scalable as much as we would like to think, that it's just easier to just keep doubling your money and growing your account consistently. But at some point, active day trading is just not going to be able to give you that sort of liquidity in order to, generate that kind of profits, or keep growing your account and taking more risk. At some point, the liquidity constraints are going to be real. And in comparison, active investing is a lot more scalable, because you're trying to capture a lot bigger moves. And since you can give a little bit of slippage, you can tolerate a little bit of slippage, getting fill is less of a problem. And unless and until you're a $1 billion fund, then liquidity is just not going to be a problem when you're holding positions for the long run. And if you're a $1 billion fund, what are you doing in your watching this video? Maybe I should be watching your video instead. But yeah, that's the thing when it comes to scalability. And also getting started, the cost is really just 10 to 50,000 if you have at the minimum to take it seriously and to make gains with it that are also meaningful. So this is what you're looking at, having a portfolio of 10 to 50,000 at the minimum to sort of make any gains, and then those gains also being meaningful at the same time, right? And on a side note, I just sort of thought about on the matter of $1 billion funds and all that. I find the whole argument so stupid when a lot of people out there, they're saying that hedge funds can't even beat the market, can't generate market meaning returns, and market is going up 10%, but most of the funds are barely able to make 7% return, right? And the whole argument is the reason most funds are not able to perform or beat the market is because they're not trying to beat the market. Most hedge fund managers require, at least their clients are requiring from them, is a consistent performance. It looks like that. The equity curve should be looking like that. A smooth uptrending curve, right? They're not getting paid for volatility, but they're getting paid for being conservative in the market while also growing their money. So they're not exposing and taking really large bets or large risk. Whereas a small fund, they and when I say small fund, any funds less than $1 billion, or maybe not even $1 billion, but anything less than 100 million would be considered small, medium sort of funds. Their portfolio would look like a little bit more volatile depending on what they're trying to achieve in the market and what's the end product really like. But you would see those funds are actually generating 50, 60%, or sometimes even higher depending on the fund manager and the performance levels. but those funds are really generating killer returns. And if you hear anybody say this, like, most hedge fund managers are not able to beat the market, sure, there are bad fund managers out there, fine. But a lot of the times, the really, really big hedge funds who are managing billions and billions of dollars, first of all, they are the only ones who make it into the news. Small funds who are managing a few million to a few hundred million, they're not even making the cut in terms of, getting onto the news channel. First of all, that. So nobody's really talking about it. But yeah, those guys are really making killer returns. And again, coming to this point, when you're an active investor, this is what you're looking at: 20% to 50% returns per annum if you're doing things the right way, right? We're not talking about you making silly mistakes and losing all your money. So, but if you're doing things the right way, this is what the promised land really looks like. Now, moving on to the next one, which is long-term investing. Now, I think without making this video too long, I'm going to try to make things a little bit quicker. When it comes to long-term investing, a lot of people have this buy and sell approach or buy and hold approach. And buy and hold is fine, but in this day and age, things are changing so quickly. Technology comes and changes things so quickly. And even if we don't talk about technology change, technology has made things or made information travel a lot more faster. Any company announces something, a good PR or earnings or whatnot, 10 minutes later, we all can have the possibility of finding out about that company. What did they do? And what does the market actually think about that? And what does it actually look like? So because information travels faster, stocks go up a lot more quicker, also come down a lot more quicker. The same moves that used to take place or that used to take about 2-3 years time earlier, maybe we are talking about 20 years earlier, those moves are really taking place within months because investors get to know about what's really happening with the stock, with the company, what's the fundamentals like within 5 minutes, and they're able to jump onto that opportunity really quickly. And because more and more investors are jumping onto that opportunity much more quicker, they're also capitalizing, and it reaches their target a lot more quicker, and they're just quick to take profits. Now, are there companies which are trending for years and years and years? Yes, there are, but there are about 10,000 listed stocks in the stock market. And then if you include penny stocks and pink sheets, there are about 30K stocks. How many of those stocks, 30K stocks, how many of those stocks are actually doing that, continuously trending for years and years and years? Not a lot, maybe less than 1%, or maybe even less than 0.0001% stocks. So those are your odds when you're trying to capture that sort of stuff. And if you're somebody who just happened to invest in a stock, maybe let's say over here, sure, this stock could go all the way over here. But if this 2 year period, it doesn't do anything, that is just dead money. It's not going anywhere. Your portfolio is not doing anywhere. It's not growing. And if at the same time, if the overall market happens to be moving at 10%, annualized returns, you just underperformed, you just lost money by sitting on it, right? So that is what the whole thing is when it comes to long-term investing. But if you're somebody who still wants to just absolutely be passive and just wants to take a very hands-off approach with your investing and still wants to enjoy the long-term approach, there's a better way of doing it. And the better way of doing it would be there are three types of risk in the market, right? Number one, the least risky is the market risk, right? When you invest and buy the whole market, S&P 500, that is, or QQQ, which is NASDAQ, which is the ETF for tech stocks. So when you're buying the entire market, that is the least risky thing you can do, because what are the odds of the whole market crashing? Compared to a stock crashing, those odds are much more lower, right? So you're taking less risk while still trying to capture that 10-12%, whatever the market actually gives you in that year. And especially if you're holding it for the 10-year period, on an average, stock market generates about 10% returns if your holding capacity is for 10 years, right? So that's the second thing. The second, a bit more higher risk, is sector risk. Now, sector risk is a slightly more higher compared to the overall market risk, but it's nearly not as risky as risking into a stock. And third, the most risky one would be stock risk, right? One stock, one company, one business failing and going out of business, it's a lot more likely compared to the overall market. And studies have shown that when investors try to pick the right stock and hold it for the long run, they're only making an average of 2.5% returns. And at this pace, they're just better off buying the overall market and not really be bothered by doing anything else. And with this, they're also diversified. If they're buying the overall market, they have the least amount of risk. And if there's an economic crash or financial crash does happen and the markets just crash, go down by 20, 30%, just buy some more because everything is at a discount now. Right. So that is the better way of approaching the whole long-term investing thing. If you really want to be passive, I think just buying and investing the overall market is a much better than exposing yourself to a equity risk. And also when it comes to industries changing, new competitors coming in, really just taking the old market leader out of business pretty much overnight, these things are happening in the market, right? Think about AI, new industry. Think about EVs, right? New industry. Think about Netflix. Blockbuster was an absolute giant. They went out of the business so quickly, right? And I think next big industry would be robotics. That's just my personal thinking. But given the whole advancement with AI, and of course, the robots are also just getting more and more accessible or cheaper, basically, especially in the manufacturing sector things. But yeah, so that is what the real cost looks like and real promised land looks like. And when it comes to expecting the returns, you're looking at average 10 to 12% if you're doing it right, or if how well you're doing it when it comes to long-term investing. So these are what your returns would look like. So, and also one last point about long-term investing is where a lot of investors actually mess it up, even if they have these really sound principles of just investing in the overall market, is when they get to come across a hot tip, a hot stock, or hype, or they fall into FOMO. And even though they might be buying the overall market and accumulating, and before the whole compounding thing really starts making things really big for them, they fall for that hot tip, right? Or hype. And one big mistake, one bad trade can really just wipe out a lot of their hard work, a lot of their compounding of 4 or 5 years. So if the long-term investing is the route for you, then just don't fall for those hype. Just keep following your own system of buying the overall market, being diversified in the market, and just holding things for the long run. And that's usually going to be the best route. And with both of these, active day trading and active investing, you're really just paying with your time, effort, and energy. Active trading, active investing being a lot more forgiving, and active trading being a lot more demanding, but possibly even more lucrative, right? And with investing, you're really just paying with your patience. That's what the real cost of investing is. And yeah, just to sum it up again, with active day trading, active investing, you're really just paying with your time, effort, energy, and the stress levels. Obviously, stress, energy, effort is going to be the highest. But with day trading, the risk of failure is also highest, but also the reward is a lot more higher compared to any of these when it comes to being lucrative. And active investing should be the sweet spot for most investors because they can carry out doing it part time, the commitment of time, energy, and effort. And active investing is also a lot more forgiving in terms of making mistakes in the market compared to day trading. Day trading, you can make one small mistake and it could really cost you big, whereas active investing is a lot more forgiving, and the learning curve is not as steep compared to this. And I think not being able to give up your job or existing business that you have, active generating, income generating activity that you have, is, I think, makes active investing a lot more suitable for most people. And then long-term investing, I think, is just the best way to stay diversified. Just pay with your patience, and you guaranteed to not be rich ever with investing quickly, but you're guaranteed to be financially independent once you retire, right? So those are the sort of just sum up. Those are just some of the brief explanations of all three of them I could think of right now. And if you're somebody who wants to take your investing game to the next level, be able to actively invest in the stock market and generate profits with 5 minutes a day, feel free to check it out. There's a link in the description below. Feel free to reach me on my website and then schedule a call if that sounds like something for you. And hopefully you gained some clarity from this video. If you did, consider hitting the like button, subscribe, and I'll see you in the next one, guys. Take it easy. Cheers.